Good morning. Welcome to the morning market briefing. Today is Burrito Day, April 16th, 2026. It is Thursday, of course. Burrito Day at the office, also known as Tomorrow Day. We need to trademark that, Tom. I think people will like that. Billy Joel might take issue. He did come out with a song called Tomorrow is Today.
Tomorrow Day would be a good name for a sci-fi movie. Like perhaps a sequel to
Tomorrowland.
Well, what's the movie with Tom Cruise where he dies like a zillion times?
I think
Edge
that's
of Tomorrow.
Oh,
Edge of Tomorrow? Something like that.
I thought that's tomorrow.
It's a decent movie.
Edge
it's
of
a good,
Tomorrow.
It's a
Yes,
good,
yes,
good plane
yes.
movie.
Yes.
It's not a great movie to go see, but it's fine if you're on a plane.
I think that was one of the last movies that I think you kind of reach a point in life when you stop going to the movie theater as much. But that was at a point, that was the tail end of when I was going to the movies more often.
Yeah. My wife is not a big movie goer. That was the end of my movie going career, pretty much. Also, now we have kids.
Shout out to people and friends of the show who do curate movies with theaters, though. We do appreciate you.
We have some of those. All right, let's get into it.
Let's talk about what's going on in some cities and some organizations. So New York, Tom, is floating a P8, a terror tax in New York City. We don't know exactly what the rate's going to be, but basically the idea is that if you have a residence in New York City that is not your primary residence worth more than $5 million, you're going to be taxed, and they think that's going to bring in $500 million a year in tax revenue.
The interesting thing here is, one, the survey that they used is based in 21, which would imply that most of those people had moved to Connecticut to ride out the pandemic because you couldn't do anything in New York City at all during COVID.
Or their vacation home in Florida became their primary residence at that time.
Yeah, which means they're, not really. They could be there 180 days of the year. People do that. We'll see how it goes. Famously, Dave Portnoy was doing that when Barstool had a bigger presence in New York than Chicago, and then he moved permanently to Miami/Nantucket. But here's the problem, I think, is that how many of these non-primary residences that are worth $5 million or more, which think in New York City is probably a relatively nice 2 to 3 bedroom, 2 to 3 bathroom apartment. I mean, certainly there are plenty of penthouses, but those are going to be at least double-digit millions, and those are probably going to be the ones paying the most. But they
say there's 102,000 of those units in New York City.
Yeah.
Don't qualify.
But how many of those are the ones that people are thinking of? Your Lewis Hamilton F1 driver who just sold his $35 million penthouse that he'd never set foot in New York. That was, I want to say, in the Wall Street Journal maybe 6 months ago. But how many of these are people who own a piece of property in New York? They rent it to people. The value of it is more than $5 million because, how many people live in an apartment in New York City? There's 3 roommates. It's probably a $5 million property, but they're paying $12,000 a month for rent, and they're splitting it among 3 or 4 people who now are going to eat that cost because the property owner is just going to feed that straight through the rent. It actually may have a negative effect on rental prices, particularly in those size apartments, which would be, most of call it our interns that have gone on to work at Wall Street, where they're making decent money, but they're not making money enough to buy an apartment. And they certainly aren't going to be there for the long haul because the plan is to get Goldman Sachs on your resume and move elsewhere. That's going to be a tough part.
And think of what it does to the economy. You're going to net out that money so quickly because these are people who obviously spend less than 50% of their time in the city. But if they have a place that's worth more than $5 million, they're probably spending a decent amount of money when they are in the city. And now what they're going to do is they're going to basically be selling those at lower prices. No one's going to be wanting to buy them. And so you think about the knock-on effects. You think about all the surface workers who, are working and being paid by these New York elites who are now have no reason to actually go in the city because they no longer have a property there. You think about all of the real estate agents and brokers who make their money in this range. They don't make their money selling $1 million apartments. That's I mean, they make their money selling these bigger properties, and think about all the money that they spend. And so you start following the bouncing ball, and this is really going to be an Atlas Shrugged moment for New York City, and I think that that's not good, and it already is. And we're seeing that there. We're seeing that in Washington State. We just talked about the big taxes that's going on in Washington State, and now the governor has this. Yeah, Minnesota. Minnesota doing a wealth tax, 1%.
Of anyone making more than $10 million. So expect the Vikings and the Seahawks to be eroding in talent over the next 5 years as contracts expire.
And again, that's a wealth tax. It's not an income tax. I mean, if you own a business, that's 1% off the top of the value of the business. If it's a 20 PE, then that means it's basically a 5x of that. It's 5% of the income coming off the top. So. This is something that's we're really manifesting among a number of states. We're seeing it, like I said, in Washington, and what they're doing with this money is just throwing it away. So in Washington State, they just came out with a 10% or 9.9% surcharge on incomes for people who make over $1 million, and what they're doing with it is just blows my mind. They said they were going to put it into schools, and Bob Ferguson, the governor of Washington, came out with a press release and is directing $500,000 from a strategic reserve fund to support the expansion of a company called IonQ, which is a quantum computing company. Says, this is a Washington company. Want to put it in Washington. We're going to be the bedrock of this. He comes out with a press release on a $500,000 deal, which is not much money in the grand scheme of things. But he clearly cared about this enough. The problem is IonQ is a publicly traded company worth $15 billion, headquartered in Bethesda, Maryland.
Yeah, how does that work?
This is ridiculous.
Like what lobbyist?
And he's claiming victory.
Yeah, what lobbyist who lives outside of D.C. got him to do that, and for what reason?
Yes,
because that Bethesda, Maryland is where all the lobbyists live. They drive into D.C. to work, but they don't live in D.C. So that's because they want to vote, for one. And your vote doesn't count in D.C. I mean, it's just, but the thing is, even if Mamdani does raise $500 million a year on this deal, he's about to spend $30 million building a grocery store, which, mark my words, will never open. It's said that it's going to open in 2029. This will never open. This is his version of the high-speed railroad between L.A. and San Francisco. And I'll tell you what, $30 million is just the starting point. And what's interesting is I saw a tweet thread that was showing the number of grocery stores that are independently owned that are for sale in New York, and there are many of them around between $1 and $5 million. So what he could do is take that $30 million and buy 5 grocery stores and then convert them into whatever it is his vision is for the free groceries for people of New York. And he could do that tomorrow. I mean, how long would it take to change the signage and change however it is that they run the cash registers? It couldn't take more than 6 months. And he could easily do what it is that he says he wants to do. But what this is going to be a massive money pit where tons of money is paid out to people who are on the dole, and it's just going to go away. It's going to be $1 billion grocery store that never opens.
I mean, you're going to start, we talked about universities and colleges yesterday. You're seeing universities now compete over attracting people and enrollees. You're seeing states now do that as well, except in colleges, at least colleges are trying to attract people. I feel like states are almost trying to push people away.
I mean, some are, some aren't. I mean, I listened to Kemp at that conference I spoke at a couple weeks ago, and he's talking about how the goal is to roll back state income tax in Georgia. I mean, there's obviously a lot of bonds that are tied to that, and all you have to do is continue to roll that off, and eventually you'll be in a position where the bonds are tied up to some other income source, whether it be sales tax, excise tax. I mean, they're going to be paid for by one tax or another, but I mean, look at Florida. Florida has no state income tax. That's a lot more money in your pocket. And if you choose not to spend your money on XYZ that has an excise tax, then you're not paying those taxes. You can keep that whole 5% just as a function of being financially savvy, not spending your money. I mean,
Florida's absolutely brilliant in how they do it because they essentially have a tariff.
Yeah.
Because they just have the massive tourism and the hotel and occupancy taxes, and that provides for all the, and because they have Disney and Universal and all these attractions.
Tennessee's the same way with Nashville. Go book a hotel room in Nashville right now. You'd be very lucky to get one for under $500 a night.
So essentially, you're tariffing all of the out-of-staters.
Yeah, I mean the Battery is set up that way.
Yeah, you want to come here, spend money and give us tax revenue, and then we'll better the state with it.
Yeah, I mean the Braves are the same way. They moved to Cobb County, and hotel occupancy, car rental taxes, what they call a TAB, a tax allocation bond or a tax allocation district, which would be the Battery. You spend money in the Battery, you rent a space in the Battery, all that has an extra tax associated with it, and all that goes to pay for the building of the stadium, which is backed by bonds. So, I mean, it's the Mercedes-Benz is like that for the most part, and I think to a certain degree that's why the food is so cheap at Falcons games, because they're not going to charge you $15 a beer because they want to sell more beers, because every beer pays those bonds off. I mean, it's a sneaky way of doing it, but it's actually smart because there are people who are going to go to the game and they're like, well, I'm not going to pay $40 for 2 beers, but they'll buy 2 beers for, $8 a pop, and that pays the taxes. And so that's the way they do it. I mean, the Gulch, which they're now, totally turning over, which is right next to the stadium, that's a tax allocation district. The Beltline is a tax allocation district. Any business or home that's on the Beltline, you pay a little bit extra tax, and that goes to building more Beltline. And that's been very profitable because those are high demand places to live.
They understand the network effects.
Yeah.
And I feel like Florida understands the network effects of being able to invest in and support the tourism industry, and Georgia does the same thing with the logistics industry as well. And I feel like other states aren't forward thinking enough to think about that. I
mean, longtime Atlanta residents will remember a guy named Neil Bortz. He was a libertarian talk show host. He would come on before Sean Hannity in the afternoons on News Talk 750. And he put out a book called The Fair Tax. And he basically argued that a consumption tax is the most efficient. And if you look at things like tax allocation districts, you think of hotel and occupancy taxes. Those are so hard to avoid. But when you start implementing oppressive income taxes and property taxes, you get in a position where people suddenly don't have that. They don't have income and they don't have property, even though they do. They find loopholes and they avoid paying taxes. During the Greek austerity measures in 2011, there was a Wall Street Journal article where they're talking about how they implemented a pool tax. So if you had a pool in your at your residence in the country of Greece, you had a $1,000 a year tax. And the number of people who had pools, as reported by received revenue, was like 1,200. Even though an easy look through would say there's tens of thousands of pools in Greece. I mean, you go to the island of Santorini, there's a pool in front of every single hotel room because that's the whole selling point. So you could cover all of the people who pay that tax, but suddenly nobody's got a pool, and you're going to have to go to each person and say, hey, you have a pool. We've got to get that $1,000. And by the time you do that, you've already spent $1,000 on man hours. And so people start to avoid taxes like that. And so I think that it's an interesting piece, but say like, instead of paying your marginal tax rate, you got every dollar you earned, but then you spend it based on your consumption. Then if you were someone who doesn't consume, you'd have a lot more money. And obviously the basics, everyone has to do that. And that's, if you have to buy bread and the excise tax on bread is 5%, then you're paying 5%, but you're not paying 25 or 40% depending on your income. And you buy a lot more bread because it's only 5%. You could buy more stuff. And so your consumption would go up, tax revenue would go up because everyone would have more money to spend. And if you chose not to spend it, then you're not paying these taxes. I mean, Singapore does that. And Singapore is one of the most economically free countries in the world. They're more economically free than we are. Now, if you spit on the sidewalk, they'll cane you publicly, which listen, there's trade-offs there too.
It's very clean.
It's very clean, and there's very little crime. There's certainly not homeless people pooping on the sidewalk because they'd be caned publicly. And, I'm pretty sure that if you bring drugs in that country, they'll execute you. So, I mean, those are the trade-offs. I mean, this is what people don't understand about incentives. And what you're incentivizing people is to, one, leave that state, two, pretend they don't have assets or income and find every way to get out of it. And what you're going to end up with, less tax revenue, less residents, and then suddenly you've cut a check to a company in Maryland and you don't have any money anymore, because I don't know why you would do that. End of rant.
Let's talk. Abbott Labs came out. It seems like they're getting GLP-1 on some of their Freestyle Libre devices. So they're down a little bit. Pre-market stock's cheap, so we do own some modest positions in that, and we think that's still a good long-term buy, but getting a little bit Ozempic right now. The chips. So on two types of chips. Pepsi, number one, not seeing very much inflation there at all. In fact, prices are coming down a little bit versus where they were. They're pleased with the results of some of their new marketing campaigns. So things on track broadly there. We do generally like Pepsi. It's not going to do a whole lot, but we think that's fine on the staple side. And then in the other chip space, Taiwan Semiconductor reported earnings that we just talked about them. They reported revenue a few days ago. So that wasn't really a surprise, but they did raise guidance for the full year. And I think a lot of the questions were really about capacity and addition of new capacity. Their margins are absolutely skyrocketing, which means that capacity utilization is very high and they need more capacity. So they're increasing their CapEx spending. What's interesting here is that the entire industry is doing that. Taiwan Semiconductor is increasing capacity, and now we've got Elon Musk's Terafab, which is part of the SpaceX XAI edifice, that plans to spend between $5 and $13 trillion to basically build a new fabrication facility for all Tesla chips. And so a lot of people are concerned about the competition there for Taiwan Semiconductor. Taiwan Semi says they're not concerned. It takes 3 years to build a fab. There's no shortcuts. Elon Musk is going to take that as a challenge to get that done before then. But basically, the big picture here is chip supply is going to go up in a meaningful way. Production is going to go up in a meaningful way, and costs are going to come down. And I think that's the upshot of it.
I guarantee you that fabrication plant opens before Mom Donnie's grocery store.
I agree with that.
100%. Let's get the Kalshi odds going right now. I'll bet that immediately.
So it is interesting. I mean, Nassim Taleb talks about this a lot. Never have we seen a shortage not followed by a glut. So I do think we're going to have a glut in chips supply at some point, especially on the memory chip side. So this is why Micron is struggling to make new highs as we speak. And then finally, just a quick status update on the Middle East. Israel and Lebanon, I think, are meeting in D.C. today for the first time in 34 years. Trump truthed that out last night. And then U.S. and Iran are considering a 2-week ceasefire extension to allow more time to negotiate a peace deal. The blockade, Tom, appears to be working. In 48 hours, no ships have evaded the blockade. In the meantime, the U.S. is sending thousands of additional troops into the Middle East to pressure Tehran into making a deal. Iran has floated a proposal that ships could exit the strait on the Oman side, fee-free. So it seems like negotiations are continuing. Does a deal happen before the deadline expires on Tuesday? Probably not, but I do think a ceasefire is in the offing, as they say. And I think that that's good, and we're seeing the impact on oil prices, which are now down to $90 a barrel. Still up a lot from where they were pre-Iran war, but down certainly from the highs. There
was a notable death, though, involved with the Strait of Hormuz yesterday, and that was the LIV Golf Tour. The LIV will cease operations at the end of 2026, and the Crown Prince cited the upheaval associated with the war in Iran, and not the fact that no one watches it and everyone hates it.
But man, think about those golfers who joined. I mean, for those just quick, short years, they had to endure some public scrutiny, I would say. But in exchange, they got massive, massive payouts.
Yeah.
So,
but still not as popular as Rory McIlroy, you know? So interesting. The good guys win in the end. Unfortunately, the bad guys got a big paycheck in the meantime. So let me be the first to welcome all of the prodigal sons back to the PGA Tour sometime in early 2027. But we'll see what that looks like. So,
all right. Thanks everyone for joining. We will see you tomorrow.